How would you feel making a $1,200 profit, but a few minutes later after you sell, you could have made a $6,800 profit? It happens very often, and in this video, I want to show you all how to capitalize on the bigger moves in the market. And I also want to explain why you have to accept and be okay with not always catching these moves as long as you respect your risk and you follow your plan. I'm going to break down some actual trades that we took in my Discord community, and I'm going to show you the technicals behind them, along with some psychology tips to properly mold your mindset with focusing on the market and sticking with your plan regardless of the winning trade that you have on your hands. But before we get into it, I will post a link to my Instagram in the description below at Ameritrade. For those who do not follow it, I definitely recommend following me on there. I post daily trading recaps along with very good trading tips and tricks that I guarantee you are not going to find anywhere else. The link is in the description below. But now let's get right into this video. I created a little scenarios chart about following your plan for winning trades specifically. You know, sometimes we could take winning trades, we make money on it, but we didn't follow our plan. And sometimes that's not good. So I'm going to explain that. But more importantly, for winning trades, any trade you take that you win on and you're struggling to find consistency and you're struggling with your emotions, refer back to this chart and ask yourself, did you follow your plan? And if the answer is yes, then you did very well. Your target hit, you made money, and your analysis worked out perfectly. So going to this chart, a lot of people take trades, and I did not trade on this day specifically, but I reviewed a bunch of members' trades in the Discord over the weekend, and I seen a lot of common similarities, and that is the reason why I want to make this video, because they see the crazy sell-off that we've been seeing, especially the past 2 days in the market, and they're seeing how much money they could have made if they held their contracts for 10 more minutes, or if they held them for an hour longer. So referring back to this chart, did you follow your plan? Yes, your target was hit, you made money, and your analysis worked out perfectly. So I want to go to the pre-market plan just for reference and just for context, because there were members that followed this and made money according to what I posted in the morning. I post these every single day in the Discord. So this was on the S&P. You all know it's my bread and butter. We had a few scenarios we were watching. So we had demand at 43.55 and demand at 43.45. I was watching for the market to bounce at these levels to find buyers to potentially play long. Ideally, to make it stronger, I would have wanted demand to form on that area and a retest of it. However, scenario number 2 was if we fail to find buyers, similar to the sell-off that we saw yesterday, and the market is heavy again, I'm open to playing puts below these demand zones, targeting the 43.12, 43.07 demand zone, which is this next box over here. So looking back on the chart, and for even more context, the market last Thursday, this is April 22nd and April 21st, depending on when you're watching this video, had a very aggressive and heavy sell-off. The following day, the same exact thing. So now the market opens up. We're consolidating at demand. We're really not showing any clean sign of buyers just yet, especially with the context from yesterday. There's not one sign of buyers all day on Thursday. So what makes it right, especially that we're in demand, to automatically play long without buyers proving themselves not only intraday, but also the day prior? So then the market's consolidating, and then we start moving down. Now, a lot of members took the market short when we started breaking down. Very good trade, very good entry, and let's just call it around 10:25, around 43.40, they started getting short on the S&P 500. Whether you play SPY puts off this chart, it's going to follow it identically, or you trade futures and the market started selling off solely off the future contracts. Stop loss in this case, let's just call it above 4360, maybe 4365. Then the market starts coming down, and our plan for this trade, according to the pre-market plan, let's just go off this, was we were going to target the 43.12, 43.07 demand zone. So we're in short, we're in SPY puts, let's just call it, at 10.25. These puts were at a low of, let's see, 10.25. Let's just call it $1.20. So for every 10 contracts we buy, it's $1,200 it's going to cost us. So we're in at $1.20 at 10.25. Our target now is this 4312 demand zone. So then the market starts selling off. We hit our demand zone around 12 o'clock Eastern. And let's just say we get all out of our position at this demand zone at 12 o'clock. We followed our plan perfectly. We got our confirmation signal. We had our stop loss in mind. And we had our target in mind before the trade was even put on. You must have a plan, your predetermined entry, predetermined exit, stop loss, before you physically click the buy or sell button. So around 12 o'clock Eastern, we hit this demand zone. And at the time of our entry at $1.20 on the SPY 432 puts, at noon, these were at about $1 or $2.60. So from $1.20 to $2.60, that is a 115% return in an hour and a half. We're making a $1,200 investment is making $2,600 for a $1,400 profit. Very nice gain following the simple plan, simple analysis, and stress-free, right? So we're out of this trade. It's lunchtime. We step out of our office. We go to lunch. We get food. We go get Chick-fil-A. We go get Chipotle, whatever. And then the market starts consolidating and starts selling off again. Now the market's coming down even further, and we close at the low for the day. We come back to our office to review the charts, and we see, wow, the market continued selling off. I should have never sold at 43.12 at my target. I should have kept holding. I really didn't have a reason to sell, right? Some people, they might think that's the right mindset, but before we put that trade on, we had a plan and we followed our plan. That's basically our roadmap. And if we deviate away from that map or that roadmap, we might take the wrong turn, we might take the wrong road, and we might get lost, we might get stuck, and we might hurt ourselves. It's the same thing in the market. Just because we continue moving down does not make it right that we have to be in this market as well and sell at the low. We're never going to buy at the low and sell at the high, or vice versa. If we're shorting, we always have to follow our plan, because our plan, if we have an edge, is going to show that we have consistency. So in this case, did I follow my plan? Yes. Got my entry perfectly. My target got hit, and I just made $1,400 off a $1,200 investment. My analysis worked out perfectly. I cannot look at how much more I could have made. I can't say, oh, this thing sold off another 70 points by end of day. The contracts that I got out, I got in at $1.20. I got out at $2.60. By end of day, look what happened. These went to $6.80. So my $1,200 could have made me $6,800, right? It's slaps you in the face. It sucks. But it's like having something in front of you, not knowing it's in front of you until it's not in front of you anymore, basically. That's how I look at this. You never know the market's going to keep going down. You have to follow your plan, because your plan works out for you 7 out of 10 times, 8 out of 10 times. You can't look at, oh, the market closed at $6.80. I should have made X amount more. Nah, that's the wrong mindset, and you're going to struggle severely if you do have that mindset. What you could do to fix this is focusing on another opportunity. Yeah, you followed your plan at 43.12, let's just say you sold. But okay, maybe I want to re-enter if we don't find buyers at this 43.07 demand zone, similar to what we saw earlier. It's the same exact trade down here than what it was up there. So now maybe I'll get short below 4,300, targeting the next demand zone, and I would have played different contracts, but capitalizing on the first morning move. Then I could have maybe taken a second trade and capitalized on another move. But I see a lot of people, they wanted me to review their trades, and they're like, oh, I bought at $2 and I sold at $4. And I was like, wow, great trade. Did you follow your plan? And a lot of people said yes. And I said, okay, there's nothing else you could have done. You followed your plan, and that's it. But then you got a lot of people that said, oh, but I saw by end of the day they closed at $8. I should have held. And I said, no, you shouldn't have held, because what was stopping the market from hitting this 43.12 demand zone and rallying another 100 points? And maybe you would have stopped out of your trade, right? So that's one way to look at the market. This is specifically for winning trades. As long as you follow your plan, I'm going to show you a little trick that I use that you can capitalize on a larger move like this. And I think it's going to help a lot of you. But first, I want to get into not following your plan. So you can make money and not follow your plan. It happens all the time. But if you made money and you realize by reviewing your trade you didn't sell because your target hit, then you got a lot of work to do. So if you followed your plan, you made money, but you exited because of your emotions, were you scared to lose money? Were you happy with the profits you had? And if you could answer yes to any of those questions, you're never going to be consistent this way. You're never, ever going to be consistent month after month because you're letting your emotions do the trading. So I saw a lot of other people that took trades, right? They got short directly below this demand zone. Now, if you've seen my previous videos, I'm not a big fan of automatically getting short below demand. I kind of just use it as context for, okay, buyers aren't buying at demand. Let me kind of find an area that, sellers are present where my risk to reward is going to make sense. And once I do that, then I'll get an entry. But let's just hypothetically speak. Let's just say we played puts below this demand zone. And then automatically we see the market, nice green candle to the upside, nice green buying volume, and then the market starts coming up about 10 points from that entry. We freak out, right? Our stop loss, let's just say, was now 43.50. We freak out, we sell prematurely, and we made maybe 50 bucks on this trade, or we got out a little before break even, just so we're green after commissions. And this is because we were scared to lose money, right? Wrong way to do it. You can still make money following your plan, but you exited a little prematurely. Second point, were you happy with the profits you had? So let's say we didn't get shaken out after this move. Then the market starts coming down. We see a nice sell-off. We get out prematurely right here, right? At this point, this is at 11:40. If we were in at $1.20, let's just call it. Remember, we were in at $1.20. And at 11:40 we sold. So we sold when the market looked like this. We sold prematurely. We didn't hit our target at demand. We were about 10 points away from that, but we sold a little prematurely, and we only sold now at $1.90. We're selling at now from a $1.20 entry, and we could have capitalized if we followed our plan on another 70-cent gain on the contracts. But we were scared. We were happy with the profits we had, and we didn't follow our plan. So that's the only way you have to be upset with yourself on not making more profits, is if you enter or if you exit prematurely away from your plan because you were happy with your profits. That is the only way you have to be upset with yourself for not capitalizing on a bigger move. That is the only way. You can't be upset with yourself by following your plan and seeing how much more you could have made if you help. Because I can guarantee you 8 out of 10 times, the market isn't going to aggressively sell off like this all day long. Or even better, the rally that we saw at the beginning of the week on April 19th, this thing bounced off demand and had a clean rally. And a lot of people sold too early because they didn't expect how far this thing was going to go up. And they came to me, wanted me to review their trades. They said, yeah, I sold at $4. I saw by the end of the day, these went to $6. You followed your plan. It's the only thing that can matters. Now, how to combat this. I have a take profit strategy video in the course. However, briefly, what you could do, and I only recommend this if you are consistent or if you trade more than one contract, is have a target in mind. So let's just say our pre-market plan, I could go over pre-market plans every single day from the week and just show you targets, potential entry points from scenarios that I have posted. I post these every single day. But just this one scenario, let's say we had our target at 43.12 at this demand zone, right? We trade 3 contracts a SPY. We're in at $1.20, and this thing hits demand. These go to $2.60. Instead of selling all 3 and getting out fully out of our position, maybe sell 2 contracts at $2.60 on these SPY puts and make $1.40 per contract on 3 contracts. On 2 contracts we're selling. Now we have 1 contract open. It's still in our back pocket. Our stop loss, which was originally, let's just say, at 43.60, we now boosted it up to this little high over here at 43.40. Now we got 1 contract remaining, and now, yeah, we could capitalize stress-free. We're playing with house money at this point. It doesn't matter if our contracts go to 0. We're still going to make money. And now we're playing stress-free. The market's downtrending. It's selling pretty heavy, very identical to the sell-off yesterday. We're identifying this context. Market context is very important. And our one contract that we have as a back burner, we're playing with house money, is making us money now. The market's selling off, the puts are going up in value, and yeah, maybe we sell on the day at 42.56. And our one contract, we sell at $6.80 from a $1.20 entry. And on that one contract, we're making, $5.60 a contract. That's $560 on a $120 investment. So there's multiple ways you could play it. It depends on your strategy, it depends on your personality, and it depends on the time frame that you are trading. Not the time frame candle chart, 1 minute, 5 minute, 2 minute, 3 minute, but the time frame trader you are. Are you a scalper? Are you a trend trader? Are you a swing trader? Are you an investor? So it really depends on a lot of factors, and that's why I think trading has a lot to do with self discovery and understanding what works for you the best, following the proper process. But you must have a process and you must have a plan, or else you are going to struggle severely. So I hope this video helped. If it did, drop a like. I would really appreciate that. Let's try to get 500 likes. And definitely check out the links in the description below. I offer a very in-depth and educational course that will come with access to the Discord and no extra charge. But I'm ending it on that note. Peace out.